Bharat Forge is a stock on our radar. Very strong numbers coming in from the company. In fact, the revenue growth has been in excess of 21%. Strong margins for the business, and the defense vertical is firing on all cylinders, quite literally. Well, we have Baba Kalyani joining into the conversation now. Dr. Kalyani, thanks a lot for joining in, speaking to you after a while, but things are looking really good. So congratulations on that. I wanted to understand a little bit about the defense vertical, because you do mention that you have a 3,000 crore executable defense order book over the next 24 months. What would that mean in terms of a revenue run rate in the second half of the year, purely from this vertical, or even if you want to, take us a little into FY25 as well?
I think the revenue run rate will keep growing as the quarters roll on, with some gaps in between one order to the next order, because there is a process that takes place. But overall, we are very confident about growth in our defense vertical. We have a pretty good order book. Our indigenous orders will also materialize in December for the artillery guns, hopefully, and that will add to the order book. So things are looking pretty good on all fronts.
Sorry, I didn't mean to interrupt you, but this indigenous order of artillery guns, once that comes through, on this 3,000 crores of executable order book, how much do you think you could add on to it?
Well, that will be depending, the order is going to get split between two companies. So depending on is 40-60. So let's say we get 150 numbers. So it'll add some 2,000 crores to this.
Mr. Kalyani, hi, good afternoon, sir. So defense is firing away for you. Can you give us some more color on the core business as well? How trends are there? I mean, the North American Class 8 truck orders, just the previous month, I mean, they were looking a little sluggish. That's only one small part of it. But otherwise, non-defense, what are the trends you notice as you enter the second half of the year?
Well, on every sector that we operate, including North American Class 8, we have had big improvements. Matter of fact, in H1 FY24, if you look at our financials, both top line, EBITDA, PBT, we have posted numbers that we posted in the full year of FY20. So that's the kind of growth that has happened in 4 years. And as you're aware, we are in a major transformation phase of moving from components to products. Defense is, of course, one of those transformation phases. There are other things that we are doing, which will start coming in as quarters move forward. So we are very optimistic. We see a strong growth in our company. We see a major shift in terms of the kind of products we make. We continue to make the conventional products that we were making with much higher market share worldwide. So we are very optimistic.
So what about the oil and gas business? There was this one-time inventory correction in Q1, and I believe you had guided for flattish revenues or flattish growth in FY24. Yes. How has oil and gas fared in Q2, and any update on your outlook in this segment?
Well, the oil and gas, the conventional oil and gas that we were doing, which was fracking area, that has a large inventory correction. But I think we are also looking at other opportunities in oil and gas. Overall demand for oil and gas is still strong. We are looking at other opportunities, and we will slowly be able to have other customers that will add to our top line there. So I don't see any problem in that area. Even our new industrial area is started to show growth. We have probably 20% growth over when we bought it. So, things are looking good.
Okay. The other thing what I wanted to check with you was on your debt. So the debt of the company has fallen. If you look at the consolidated debt, can you just tell me, is there scope to reduce debt further in the quarters to come? If yes, what would the year-end target look like?
Our debt, we have paid back some 350 crores, or we're going to pay back another 500 crores. So, yeah, we are continuously reducing debt, because that's as per our long-term debt reduction plan. which is there.
So by when will you pay back that additional 500 crores? Currently, your debt is 2,175 crores on a consolidated
In the next
basis.
6 months. In the next 6 months.
Okay.
So just one final point. You mentioned that obviously it's not just defense, where obviously artillery, guns are a big focus. But you're saying even in other areas, over the years, the whole transition program is underway where you move from subsystems and components to actual end products. Can you give us some sort of, idea of timelines, FY25, 26? What should be these big marquee products that we can watch out for? And what does that mean for the company's blended margins? I believe at a company level, you are close to 27% now as of this quarter that just closed by. So what should we expect in terms of the margin profile, say, a year and a half down the line?
I think you should see something similar or a little better. The big new products that you will see apart from in the defense area, apart from artillery guns, will be armored vehicles. We have a large program on armored vehicles coming up. And a lot of, everything that we do in defense, we will probably do more in the export market than we'll do in the indigenous market. We see tremendous amount of demand coming from many different countries. So we are very optimistic about it.
And so when will the domestic artillery guns order, when is it expected to commence? And same question for armored vehicles?
Armored vehicles we are already supplying to the Indian Army. Artillery gun orders will come. The ATACS order will come hopefully in December, January.
Okay, all right. And you said that was the indigenous order for which you'll add about 2,000 crores, right, to your defense order book?
Absolutely.
Okay, all right. Dr. Kalyani, thanks a lot for joining in. All the best and congratulations once again. Very strong set of numbers. Commentary also has been very positive from your end. So the street likes that. Up about 4% for the stock at a little under 1,100 rupees. Let's slip into a quick break. On the other side of the break, lots more coming up. Stay tuned.